This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley market snapshot for the last week here in February of 2020. I've been reading a lot of news articles recently on the Bay Area housing market, and it's very interesting of the different mixed messages that we're getting here from different news sources. And so what I wanted to do is piece it all together and give you a futuristic outlook, projections for the next 12, 24, 36 months based on not just the data that we're seeing, but also consumer sentiment and kind of tying it all together. Because really, it's not just about the numbers. It's not just about the news articles. It's not just about consumer sentiment, but everything feeds into everything else. And so it's very important to not just pay attention to one data point or one point and declare that that's going to, or declare that that is the end all be all. The data is not going to tell us everything because the data can turn at the drop of a dime. What's interesting though is that trend graphics, which you'll see here down below, Trend Graphics is a data conglomerate. They basically a data conglomerate. I don't think that's the right word for it, but they are a data curator. There we go, and they pull straight from the multiple listing service. And so what you'll see here is things that we've talked about before. And what's interesting is that when we look at the Santa Clara County numbers for January of 2020, now that we have the full data scope, there were more homes for sale than homes sold, and there were more homes for sale than homes pending, which is interesting because even though there were more homes on the market than solds, the pending numbers is what we really want to pay attention to because that gives us more real-time information. And for the pendings to not be above for sale inventory really means that demand was a little bit lower than supply. And that is not necessarily the way that this is not necessarily the sentiment that we've been feeling up to this point, because really, if you've been watching these videos for any period of time, you'll know that the majority of homes that we're seeing right now are getting multiple offers. And so I think a lot of that, or some of that, is carryover from from last year. What we've been seeing a lot is, and just on the front lines, my team and I, we're writing offers on properties. If we're writing an offer on a property, it's on a home that's been on the market for less than a week, or it's a home that's been on the market for over 100 days. And that is a huge, huge difference. And so I think what you're seeing is a lot of excess inventory that hasn't been absorbed yet. And the reason is because they've been on the market too long for them to be considered fresh. And so I do believe, just based on the momentum that we're experiencing here in Santa Clara County, you'll see some of these numbers begin to play themselves out. I do expect that pendings will supersede active inventory at some point in the next month or two. And it will be interesting to keep our eyes on that. That being said, when you look at the condo and townhome numbers here in Santa Clara County, which you'll see right there on your screen, pendings are far outpacing for sale inventory. I mean, not by any extreme amount, but we're talking 20 to 30% here, which is not insignificant. But it's interesting because when you compare these numbers to what's being written out there, it's actually fairly consistent with what I've been saying over the last 3 months or so, ever since we saw this kind of uptick or this signaling that there was going to be an uptick in the market. And this comes out of, my goodness, what is this? I had the Housing Wire, HousingWire.com published an article. Real estate agents are feeling pressure from low housing inventory. And according to a recent Realtor.com report, the nation's inventory of homes for sale sank 14% in January, falling to the lowest level since at least 2012. The highest rate of competition was in the San Francisco Bay Area, where agents estimated that more than 90% of the time there were multiple offers on homes their clients were bidding on. Crazy. Article goes on to say, meanwhile, in the Bay Area, buyers are going to extreme lengths to win a home. The survey showed, and then there's a quote here from a real estate agent. After missing out on one home due to a bidding war, my clients were much more aggressive on their next offer, said real estate agent Jennifer Tolinar. Don't know who Jennifer is. In order to beat 24 other offers, they put 50% down. 24 other offers. They put 50% down, wrote a great letter to the sellers, removed all contingencies. This was on a home with the purchase price of over $1.7 million. That is the market that we're in, folks. That is the market that we're in. However, I want to juxtapose this with an article that was recently released just a few days ago on February 24th by Adam Brinklow. It's on curbed.com, which I featured before. Number of San Francisco homes selling under asking price spikes 4 months in a row. Here's one to turn heads. Real estate site Realty Hop has declared San Francisco one of the coldest home markets in the nation for the last 4 months in a row. Why am I bringing this up? If you've been watching these videos for any period of time, you'll know that I talk about what happens in the northern part of the peninsula tends to matriculate down into the South Bay. So, I am warning people, these market conditions that are being experienced in San Francisco right now could very well matriculate into the South Bay. I'm not saying that it will, but we should definitely pay attention to what's going on in these primary markets up there, because while it doesn't necessarily predicate with 100% certainty or predict with 100% certainty what's going to happen here in the South Bay, it generally does matriculate down into our area. And so, why am I saying this? Well, if you're a home seller, these are the market conditions that you want to sell in. When there's low inventory, when there's a lot of demand, when there's multiple offers, when homes are selling far up and above and beyond list price. Why? Because you control the narrative and you have even more leverage than you are accustomed to seeing in the Silicon Valley. Juxtapose that with what's going on right now in San Francisco when homes are selling below list price, taking a long time to sell, etc. Yes, 24 months is a long time. If this eventually translates down here into Santa Clara County, there's going to be a lot of equity gained over the next 12 to 24 months. And so the question really becomes, is that gain significant enough to offset the losses that you may incur by selling in a down market, or not a down market, but a weaker market, right? So these are the kinds of questions that you need to ask yourself. And so my suggestion is always, well, you want to sell when the going is good, because the leverage that you create is going to translate into a smoother sale. It's going to translate into more money in your pocket, and it's almost always going to translate into you feeling that you got what you wanted, right? Or feeling like you truly got the highest possible price, which, let's be real, if you're selling and you sell it for below what you're asking, you're never going to truly feel like you got the highest possible price. And so that feeds into consumer sentiment, which is what I wanted to touch on next. Consumer sentiment is super important. And as we move into the latter part of this year, I do expect consumer sentiment to drop regardless of what happens with the election, but especially because of the election. There's half the people are going to be ecstatic and half the people are going to be very disappointed. And so when half the population is sad, that's bad. That's very bad. And so for a few months at the end of this year, we are going to have guaranteed a weaker market. And so if you're a home seller kind of on the fence and you're trying to get out before the end of the year, this 90% of homes, multiple offers. Do I need to spell it out for you? You already know what you need to do, right? So now there's a big difference between selling it for the highest possible price, which is why my team and I are here. And again, these statistics, this data, everything, I've said it time and time again, they only give you part of the equation. So it's really up to me and to you to sit down and go over your particular situation and make sure that we're really truly getting you what you want, which is the highest possible price. Buyers. Let's talk to buyers for like the next 30 seconds. Buyers, if you're watching this video, I already know what you're thinking. Well, if the market is so red hot right now, why should I be buying? That's a great question. I think you really owe it to yourself to calculate out what these low interest rates mean for you, as opposed to perhaps sitting out on the sidelines and waiting for the market to weaken a little bit. Do the low interest rates eventually spell out paying less over the next 30 years, as opposed to sitting on the sidelines for the next 12 months and waiting for potentially the market to go down? There's no guarantees, right? Especially in real estate, there are no guarantees. So if you find the home that you love and it makes sense for you, the numbers pan out, there's no reason to not go for it, right? There's no reason to not go for it. And that's why talking to home sellers and talking to home buyers, two very different things, because home sellers are selling their home and they're making a profit. Home buyers are investing in their future and are buying their dream, right? Now, the investment part of it is secondary to do you absolutely love where you live, because that is super important. Guys, I've always wondered why people buy bad mattresses. You're gonna be sleeping on it for the next, 5 to 10 years every single night? Why are you gonna spend $200 less on a mattress that sucks? It's the same thing, right? Like, if you're going to buy a home that you're gonna live in for the next 5 to 10 years, why wouldn't you buy something that you inherently love living in more, even if the one down the street might be a little bit cheaper? Do you see where I'm going with this? So don't allow the minutia get in the way of what you really, really, really want, which is a home to live in and love. And that's ultimately what we're here to do, is help you find your dream home. So anyways, guys, those are my thoughts. If you have any comments, questions, everything, you can leave them down below. I'm more than happy to answer them. And until next time, this is Danny Gould, everyone, with the Selling Silicon Valley Group, with the Silicon Valley Market Snapshot. I will catch all of you in the next video.